All right, we're here. We're back, Chris. Thanks for joining me again for another episode of the Equity Accelerator podcast, where you and I just have an excellent conversation, as excellent as we know how to have, about running a mortgage business, running a real estate business, owning real estate, how to bring equity to any and all facets of your life. And I'm super excited because today we're joined by an old friend of mine, Dan Rawitch. I hope I'm saying that right. I've always just read your name. I've never actually. I know him mainly from internet communities, where Dan has been a real thought leader around the mortgage space. He's has about 30 years of experience in mortgage lending and all facets, as a producer, as an executive, as a manager. He previous to that, correct me if I'm wrong, you had you were in bond trading. Were you working for a bond operation of some kind previous to your mortgage experience?
Yep. After college, I was recruited by Bear Stearns. At that time, Bear Stearns was the firm. We're really players, but Bear Stearns really dominated the fixed income space. And I was a trader for them. And I would say I always like to give Larry Kudlow credit. He was our chief economist when I was a young kid on the desk. He was a young guy. And, we had many interesting conversations. I doubt that he would remember me. I can't say that he's a mentor, but he shaped my views. Now it's been almost 40 years. And what that guy said has played out so incredibly well, over the last few decades.
Wow. So, he's trying to shape our views again. Now he's like one of the top economic advisors for the Trump administration. I'm not sure how he fits in. Is he involved in the trade negotiation, or is he more just sort of like a PR face for?
Yeah, I think he's more of what's his title, financial advisor. But I'll tell you what, I again, trying to stay non-political here, he has definitely gulped the Kool-Aid, and he's losing credibility in my book. I love the guy. I think he's brilliant. I don't think he would lie to the public, but I think President Trump must be very compelling because he's just mimicking all the things that Trump is saying, and I don't believe a lot of them.
Interesting. Yeah, it's very strange times. And as we're recording this, the House has just passed an impeachment process. And so I wanted to bring you in. We're going to talk a lot of politics on this episode. I really wanted to bring your perspective as someone who knows about how the mortgage industry works, how real estate works, but also how, and if you're new to this podcast, we've talked about this in the past, but the mortgage rates that people can acquire on any given day are a function of mortgage-backed securities, which is a part of the overall bond market. So as the bond market goes up and down every day, mortgage rates go up and down in lockstep with that. And so paying attention to the bond market and what the bond market is going, how it might react to this or that is really the name of the game for figuring out if, rates are going to go up or they're going to go down. And as we look into the near future with impeachment, President Trump is going to be impeached. Whether or not he is removed from office remains to be seen. What is that going to do to the bond market? That's what I wanted to bring you on to talk about. And then also we have, 5 or 6 really viable Democratic presidential nominees who, Super Tuesday is going to be in February. I think we'll have, it'll be down to 1 or 2 by March. And I think in early March, I can't remember the exact dates, but in March, we'll have a single nominee that everyone's, coalescing around. I don't know who it's going to be. It seems really like a jump ball right now. And it occurs to me that, some of the nominees would mean, different nominees on the Democratic side would bring a much different type of problem set or solution set to the bond market. And so I wanted to kind of go through 6 or 7 potential outcomes for 2020 and try to predict what that might mean for interest rates and what that might mean for the economy in 2020. So that's what I'm hoping to talk about today.
Awesome.
So the first thing, Dan, is the impeachment. I think that's going to be the first domino to fall, right? That's going to happen. And I know we can't predict if he's going to be removed from office. It seems pretty unlikely that that would happen, to be honest with you, based on my read.
Right.
So, I mean, impeachment is obviously already cooked into the bond market, but if Trump were removed from office in January, what do you think what would that mean to the financial space in the near term?
Well, so right now, I don't think, to a certain extent, what you said about it being cooked into the bond market, I think there's some truth to that. But I think if you talk to most traders, nobody's taking it very seriously, and maybe we should be. But it's certainly not priced into the stock market.
Well, he is. I mean, he's going to be impeached.
Record highs upon highs upon highs if somebody believed that a progressive, right. But whether or not it's voted in the Senate is a whole different story. And as I recall, I think even 2 of the Democrats voted against moving forward with the Democrat, and they need, I think, 5 or 6 Republicans to vote to get them out. So it doesn't seem like there's a pathway to get there. I'm not an expert on the subject, by any stretch. So feel free to fact check me on anything. But I read a lot, and I don't see it. And like I said, and you'll hear this over and over when we talk about various candidates. Ever since Trump got elected, there's been what's been referred to as the Trump effect. And the stock market has gone crazy. I've never seen the stock market grow under a single president so much. And some of it is perception, not reality. The tax cut probably didn't do a fraction of what people thought it would. But the fact is, he's progressive. Look at our industry, James. I mean, the regulations, it was so regulated, you could hardly lend anymore. It hurt the rates the consumers were paying because companies I worked with, compliance departments grew from 12 to 100. Right. And that all went back into price for the borrower. The companies didn't pay it out of their pocket. So Trump's been, one by one, sort of cutting red tape and making it easy, talking about the economy and this president. So maybe we've referred to something that we call the Trump put. And a put is if you're trading options. If I think that the S&P is going to go down a lot, there's a lot of different ways I could trade that. But one of the things I would do most simply is I could buy a put. And a put is basically saying to somebody that they have to buy my stock, even though I don't have it, if it drops below a certain level. So I have a guaranteed buyer at, let's say, 2,800. And if it goes down to 22,000, I make thousands and thousands of dollars. So every dollar it drops below a certain level, I'm covered. I have a put in place. So the Trump put has been every time the market sells off, every single time. And JP Morgan actually graphed this. There's a tweet that comes usually the morning before it opens or the afternoon after it closed. And then the effect of those tweets is literally manipulating the market, like to the point that I can't even believe the SEC isn't somehow involved. But I guess, how do you tell the president to stop doing something if you're the SEC?
I know.
But it's driving me nuts, as a trader. So that's still here though. So if you look at where the market was before he came into office, and if you pull him out and you put in almost any Democrat, because again, the markets don't perceive Democrats as growth oriented. They perceive them as entitlement and spending and things that haven't necessarily helped the economy. Although under Bill Clinton's watch, the economy did very, very well. But other than that, for the most part, if you look, the growth seems to have been coming from the Republican presidents. So I believe that if you yanked him out suddenly, you would go back to the levels that you've seen back in 2016. And there's some real smart people that are saying count on about 25% reduction in the stock market immediately.
I remember,
if anybody gets elected.
I remember reading that before the 2016 election, that if Trump wins, there'll be a 20% haircut immediately on the markets. And then when it looked like he was going to win that night on election day, the Asian markets went into a free fall. Futures were like down 1,500 points when I went to bed that night. And I was, in my mind, I was just swimming in shock. And I was thinking, I can't believe Trump just got elected president. That I didn't see that coming. And then I I was like, well, at least tomorrow when I wake up, I'm going to be able to lock some legendarily low rates. And I
Right.
had 6 or 7 clients that were not locked. And I woke up the next day, the markets had completely reversed. Mortgage rates started spiking. A bunch of money left the bond market immediately. And it was just the rally, the route was on, you know?
Yep.
And
Well,
so I'm so, Trump has taught me a lot of things. But the election of Trump has really shaken me as far as our media environment goes. And that's been one of his things that he keeps saying. I don't feel like I trust him as a speaker, as a leader, but I feel like he has identified a few things correctly. And one of the things that he has identified and exploited is some sort of fundamental problem with the media. So I part of me is, I don't know what to believe anymore. So you say if the Democratic gets elected now, it's going to cut 20%. I'm like, well, we heard that about Trump and it was wrong, but you're the trader.
Did we hear that?
This isn't the media talking.
I was incredibly long at that point, meaning bullish. And we killed it during that period. So it was so obvious to me. And I think the people that I talked to, that having somebody that was going to get in and cut taxes and cut red tape, how does that ever not create growth? I mean, it never has not created growth. It might create inflation, a lot of other problems, but I just don't see how people believed if he got elected, the stock market would go down. I just think maybe it was he's going to ruin the country, or he's going to get us nuked, keep his finger off the button, maybe that kind of thing. But from a financial market standpoint, I think he was always the solid candidate.
So, okay. So let's say that's one option, is that Trump gets reelected. Do you think the markets kind of just keep on keeping on? Do you think that it goes even better? Does it get worse? What happens if Trump gets reelected? Let's start with that.
Yeah. So 2 things. One, in full disclosure, I've been wrong about what I'm about to say for the past year. But you've heard the saying that even a broken watch is right twice a day.
Yeah, if you keep being wrong, eventually it'll become right.
It's almost midnight, and I'm going to be really right. And I don't know if you read, I have a newsletter called Swamponomics, and I've been really covering these issues for the last year. The market is more overbought than it's ever been in the history. It's about as overbought as it was back during the Depression, and that's empirical data. That's not someone's opinion. That's right. Looking at the valuations of companies, their price to earnings ratio. It's ridiculous. And then we have something called the VIX. The VIX is the fear indicator for Wall Street.
Right. It's the volatility index.
Yep. And I've been long the VIX and eating my lunch on a daily basis. But I'm hanging on.
So long the VIX means you think things are going to get less volatile or more volatile?
Things are going to get really ugly really fast. And so when things get ugly in the stock market, the VIX will just skyrocket. Right now, the VIX just hit the lowest level it's ever been.
Are
things
astounding.
That good? Yes. And there's another thing which is interesting. Sorry, I don't want to get too geeky on you, so stop me anytime you want.
No, let's geek out, man.
So there's puts and there's calls. If you think something's going to go up, you buy a call. If you think something's going down, you buy a put. That's the simplest form of options.
Gotcha.
So I think the market's going to get ugly, the VIX is going to go up, I'm going to buy calls. Right now, if I want to buy a call in the VIX, it costs me $4.75. Let's say to buy a call, that's betting the stock that market's going to be above where it is today between now and let's say next year. Okay, so that's $4.50. If I want to buy a put and bet the market's going to go down during the same period, it's 30 cents. That has never happened in the history, where the call to put ratio, it's like 15 times cheaper to buy a put. And what that's telling you is, if you go to the horse races and you buy a $2 horse race ticket, you could win thousands and thousands of dollars betting on the long shot, right? But if you want to bet on the favorite horse, it's a more expensive ticket, and your odds are, maybe 2 to 1. Right. So the market is screaming that everybody believes there's only one way for the VIX to go, and that's up. Yet it keeps falling. So every time it falls, we jump back in. So I want to be honest about that. I've been wrong. I've been calling this overbought market, but this Trump effect, this Trump put, I think has more power than anybody could ever realize. I'm seeing it. I see the tweets and I'm like, okay, I just lost, this much money last night because of that tweet. I went to bed with my positions all beautiful. I woke up looking very badly because of a tweet.
God.
So I wouldn't go to dinner if the guy invited me. I would never even sit at the same table as him. So, and that's non-political. That's just, I just think he's obnoxious.
It's pure frustration as
It's
a
just,
trader.
yeah, well, probably.
Do you feel like, I mean, when we say Wall Street, how many people were we talking about? 10,000 people that are connected to the trading universe, or is it way more, like 100,000 people?
Yeah, way more. I'm sure it's well into the six figures. That's a good question. It's something I'd like to find out. But you look, Goldman Sachs alone's got to have 40,000 people in the firm.
Oh my God! Wow.
How many of those actually trade? I don't know.
Right.
But yeah. So if you just think about it for a second, if a Democrat comes in and already talking about raising taxes, and I'm talking to you as if you don't know this stuff, but I know you know this stuff, so more for your listeners.
Right.
But if I woke up tomorrow and somebody told me I was going to make $10,000 less next year, I'm 60 years old. I am going to adjust my spending. I absolutely can guarantee you that's a car I won't buy. That's a trip I won't take. There is no way the tax increases do not bleed through and stop the economy. Not stop it, but slow it down.
Right. I mean, that's part of our, taxes touch every citizen, right?
Yeah.
Every day. So it's a real thing.
We have in California right now, Gavin Newsom, the governor of California.
Right.
He's a real peach. So everybody's behind this guy. Oh, love him. Because as you know, I probably live in the most liberal state there is. You might be close. It's close second. But you're in Oregon, right?
I'm in Portland, Oregon. Yeah, it's quite liberal.
Yeah. Okay. Yeah. So we have a lot of similarities, but he was heroic here in the state. And then all of a sudden we're paying $5 a gallon for gas. And now there's petitions everywhere to get him out of office. When you hit somebody's pocketbook, you're done. And I just don't feel like the Democrats are seeing that right now. There are times where we could have afforded it, but right now, GDP, that's pretty pathetic. I mean, that's a hiccup away from, being at 0.9, 0.7. So the macroeconomics right now of the economy are interesting. And that is, this has been proven. When humans, people reach the age of 46, that's their peak spending years. So I reached 46 about when the market melted down in 07. And the timing was phenomenal. People say it was subprime, it was this, it was that. It was all those things. But really what happened is the baby boomers, which at that time was the biggest generation in the history of mankind, aged out. We stopped. We said, I'm out. I don't want a Ferrari anymore. I just want a car that gets me where I want to go. It's weird. I never thought I would feel that way, but my toys have gotten cheaper. My perception of what's cool has changed. So we're aging out, and our birth rate is declining at rates we've never seen before. Our birth rates are declining at the same pace as Japan's. Japan aged out about a decade before us, and you know what's going on there. They've had 20 years of deflation. Just they cannot, all the king's horses, all the king's men cannot put Japan together again because they're too old and there's not enough of them. China is right behind us.
I was about to say, China's an inverted pyramid, and with their, generations of social engineering, one child that they have, that they're demographically shrinking, and not just shrinking, but being crushed by the older generations above them, Yes,
you just said it perfectly, because as we get older, we cost money. We know 10 years from now, I'm not going to be contributing anything to this economy. I'm going to be draining from it. Now, I think I'll be draining hard-earned dollars, but that's a huge shift from the baby boomers being at their peak years and generating millions and billions of dollars of tax money to suddenly not generating and taking it back. The effect of that, people are just missing that. Look at Germany. Germany is screwed because, again, they aged out about 4 years ago, and they're open borders. Come one, come all. Doesn't matter if you have a job, can have entitlements. I don't think they're going to get out of this. I think there's nothing they can do to get out of it. And we risk going down that same path. Even if a Republican stays in office and even if we do everything right, we're praying that the millennials, get of age fast and keep buying stuff. And by the way, I do think that's going to save this economy. I personally think we talk about recession in 2020, 2021. I think we might have a tiny little bit of a recession.
Sure.
But but I really believe that 2022, 23, 24 will be some of the best times we've ever seen in history, certainly in the real estate market.
Wow.
Because baby boomers, we're downsizing, but that's a
Yep.
transaction.
Yep.
And my kids, I have 2 millennials and one really weird generation, whatever the
Gen
20-year-olds are.
Z.
They're crazy. My daughter's crazy. I mean, it's like they don't talk to people. Like, it's like she's a brainiac. She's super smart, but she works for our company, and she will not talk to a client. She'll have an anxiety attack and call her mom. Mom, Dad wants me to call this person. Like,
All right.
send them a text. Sorry.
Well, we just got a ton of information from you there about kind of like, so you're saying that these big swings in the market aren't necessarily political as much as they are generational demographic shifts. And I'm reading articles that the baby boom millennials are I've read headlines recently. I say I've read articles, I've read headlines. Okay. That's what we've come to. The headline is that millennials are going to inherit $1 trillion worth of wealth in the next, 10 years or something like that. Of course, they never talk about Gen X. We just get skipped over. We're kind of in the middle there.
Yeah. My wife's one.
But, let's get back on track and talk, and let's think about kind of like, we're heading down the Democratic presidential nomination. And so I sort of have them in buckets. You have your Joe Biden, who's kind of your centrist. Joe Biden is like let's get back to normal president, right?
Yep.
This is crazy. Let's just go back to normal. Joe Biden is he's the normal guy. And he's leading all the polls. I mean, I think if it happened today, he'd probably get the nomination. And then you've got the insurgent progressive people, which are like Elizabeth Warren and Bernie Sanders. And they are the ones who are getting a lot of great press, right now, and they're getting a lot of energy behind them, and their campaigns seem to be doing very well. So I kind of feel like if one of those guys gets the Warren Sanders, they're kind of interchangeable from what are the market's going to do. What do you think happens if one of those people gets the nomination? So let's think about this. Just getting the nomination, does that affect the bond market very much, or is it really who becomes president?
That's a great question. I have to guess at this answer. I never thought about that. I would think the nomination will have an impact on the market, particularly if the impeachment discussions are moving forward and Trump keeps dropping in the polls. His popularity keeps going down. I think whoever gets nomination is going to have a big impact. It's a good point.
So let's say and it seems like, Sanders and Warren are the most threatening to the Wall Street system as it is right now. And one of the things that, I mean, I don't necessarily think this is political. I mean, I guess it is, but one of the things that I've been doing mortgages since 2003. So I've seen the worst version of this industry, and I've seen the best version of this industry. Mm-hmm. And I've read The Big Short, and I've studied, all of the humanity around all these things. And it occurs to me that white collar crime in America is so much bigger than anybody could ever fathom. So much bigger than it's white collar crime is maybe the number one industry in the world or something. I don't know. Like you couldn't overstate to me. I would never be shocked by how much white collar crime is going like completely unchecked in the United States. And so I feel like that's actually a problem. And that, a Sanders and a Warren are the first people to have as a very top priority in their administration would be to try to beat that back.
Yeah. So, I can't comment so much on that. I don't know that a president could get down into that and necessarily solve that one. But if that's their goal, that's where it gets really ugly, because it almost goes to Trump building the wall or trying to keep some of these promises. You do some really dumb things, right. And some of these promises should never have been said, and they should never be kept. So look, Warren and Sanders are very dangerous to this country, in my opinion. I like I could see myself leaving the United States if one of those two are elected, because I think that we're headed toward a civil war. I know that's really drastic.
Wow.
And yes,
Like with like a hot war, like with guns and like people like trying to start two countries.
well, I just read an article that the last stage of a civil war are the guns. And hopefully it would never get to that stage. But you're seeing it when the Republicans tried to go in and hear these closed talks. They were met by armed guards around the door. Oops. Sorry. So we have Americans showing other Americans guns that are to state senators and congressmen. You can't come in here. I mean, maybe I'm overthinking that in my mind, but if you look at what's going on in the homeless population in Los Angeles, I don't know how it is in Portland, but
It's not
we
good.
have diseases now that we haven't seen since mankind was born, like typhoid, and I don't know if I say that word right, but horrible diseases are coming up. Their streets of police won't go down because they're too scared, and that's growing exponentially. And
Right.
so it's where
I
does it
don't know
end?
that Civil War seems like, I don't really feel like it's Republicans against Democrats as much as Trump would like to frame it that way. I wonder if it's more corporations versus government as like the main sides. You know, it's like the thing that
Yeah.
occurs to me is a company like Amazon or Google or Goldman Sachs, in some, or not Goldman Sachs specifically, but I mean, Amazon is potentially more powerful than the United States government, right? They
Well,
do a lot of the same things that the government's supposed to do, and they do it better, and they own it.
yeah, yeah. No, those mega corporations. Apple has a market cap of $1 trillion. I mean, think about that. Think about what $1 trillion is. So I don't think you're wrong about that.
And so
But I think,
when I see Warren and Bernie ascendant, it's them as that's a representation of, not like we're against Republicans, is we're against these like giant corporations. That's how I sort of envision it, at least. And and maybe the corporations should be smaller, should be regulated a little differently, and they should diffuse their power in some other ways.
yeah,
Right.
I don't object to some of that stuff. What I object to, and here's where maybe a little political leaning might come out. I first of all, this country needs immigrants. We need them very badly because of our birth rate. Bring them, please, bring them. Come from everywhere,
Sure.
but come in legally and pay taxes, and then God bless you, right? But I'm a bleeding heart when it comes to giving. I give way too much in terms of just of myself or whatever. I want to help everybody. So if you told me there's a family that's impoverished trying to come into the U.S. and they need a hand, I'd be the first guy, if I met that family, to want to give them a hand. Yet when you play that out for a second and you say, well, how is this going to get paid for? Warren finally admitted this morning that, yeah, we will have to tax the middle class to pay for some of this stuff. But that's only to
Clearly.
pay for one thing. That's just healthcare. Yes, you said that this morning. That's just healthcare. We haven't talked about what we're going to do for people that don't even live in the United States that want to come over once they start opening up the borders. So where I think the Civil War, and I know how drastic that sounded, if you open the borders, I think you're going to have a socialism versus capitalism type battle, because people, and it's going to be people you can't even imagine, people that think they're liberal today, when they see a 25% tax hit, and they start thinking, wait, I can't afford to give my own kids health care, but we're going to give it to this family that just crossed the border that doesn't have a job. That's where I think this could really start unraveling. And so that's where, like, Biden to me is Biden. Yeah, I mean, he's old, but he's a moderate guy.
Yeah.
I don't think he would be dangerous.
He's like he's what you call a corporate sort of technocrat, right? And I think, yeah, he's a known quantity. He's not dangerous. I would say the moderate wing of the Democratic Party, the three viable moderate nominees would be Biden, Buttigieg and Klobuchar. They're the ones who are kind of clogging that middle lane, and are professional political operators and leaders, and I think would put into place apparatus that we would recognize, right? I mean, Trump, one of the things that Trump has done, I think that has been really eye-opening for me, is that he's just dismantled the executive apparatus. He's just removed, there's no decision-making apparatus. He's just says, delete everything, and I'll just make every decision.
It's weird. Right? Yeah.
And
ultimate autocrat.
Yeah. And that's the scariest part, is there's no, the federal government's large and bureaucracies are supposed to be slow and kind of unwieldy, and that's a feature, not a bug, And so
because some of those wheels turning more slowly are it's that need to be gone through the safety checks as we go through decisions.
Yeah, big consequential decisions. So anyway, I think that we want a little bit more bureaucracy on some levels. That's my comfort level, I guess. But I would say that from a bond perspective, let's say Biden or one of those three gets the nomination, or becomes president. What do you think? Do you think we get that 20%? If we get that moderate technocrat, corporate lobbyists are funding them, and they're, not much is going to change kind of person. You think it's just like a more predictable version of it's like trading in Trump's America without the tweets?
Yeah, that's what I would hope, but without a lot of the other BS. And some of that other BS would be some of the over regulating us, over caring for people coming into the country when it's taken away from people that have worked their whole lives that need those entitlements. I think, in California, you guys are much more on the front lines of that conversation than most people in the United States. I don't, thank God. It's hard for me to really relate to that in Oregon, frankly. But. Yeah, well, that's good. Yeah. So, and the reason I want to spend a minute talking about the macroeconomics back a few minutes ago was because of this statement. I don't think it matters who comes in. There's going to be a stock market correction, a massive stock market correction, because it's due. It's just due. And so the market at some point is just going to be looking for a reason. We're overbought. Oh, but this tweet says everything's fine, so let's get overbought some more. Fed drops rates, more helium goes into the bubble. Bubble,
my favorite is the Chinese trade negotiation.
Oh my gosh.
That's never going to be solved.
That one's driving me nuts. Yeah. And every time he says something good about the market, goes up 200 or 300 points.
I know. And it's just like, hey, we almost, like, the guy smiled at me and he shook my hand really firm, and like, we're going to have a good conversation next week. And the market just goes crazy, right?
Yep. So I think that a correction's coming, and I think, of course, that's going to be phenomenal for bonds, because you either have a risk on or risk off in the investment world. And when people get scared, risk switch goes off, and people jump into bonds and gold. So I see that coming. My concern is that rates could get really low, but for all the wrong reasons. There's a point where it's fun in the mortgage industry. We get to refi people and watch them buy homes and all that. But if things get too weak, then it could affect housing. But as I feel today, I think that if we do have a small recession, I just think housing's going to dodge the bullet. And I wrote one of my newsletters about that, just strictly about that, because.
Well, let's talk about that. I think I signed up for your newsletter, but I can't remember if I've read one yet or not. I signed up for it recently, and maybe I got distracted and didn't hit like complete or send or whatever. But I want to make sure I start getting your newsletter. Swamponomics, is that just at swamponomics.com, or is it at how? Well,
it's part. It's my website is universityofoptions.com. And then Swamponomics is a newsletter we put out. It's just one.
Why do you call it Swamponomics?
Drain the swamp. And because the idea is, in my opinion, there's so much false news from the media coming out about the economy. Kudlow's an example right now. He's now one of the problems when he was one of the solutions. The talking heads on CNBC, they make me want to barf sometimes, because all they ever all they ever do is interview people that are bullish when the market's bullish, and it hurts people. You won't see Harry Dent on CNBC. He's probably one of the brightest economists of our time, but he's bearish, and he's seeing the bubbles. But they don't want to hear that on CNBC. Now, when things sell off and it gets bearish, all you'll hear are bearish people. That's all they'll interview. That's all they bring on, and people will start dumping their stocks instead of holding on. So it's just, so my idea was, let's try to keep the politics out of this and let's drill down to really what's happening in the economy.
Awesome. Well, if you're listening, Dan, thank you so much for your time on this. The conversation was awesome, as I knew it would be. Didn't quite go the way I thought it would. I thought we would be getting but we got some bigger ideas than I was expecting. And I guess this is great news for people in our business, in the mortgage industry. I mean, I've been looking to 2020 to possibly be my best year ever in production.
Yeah, I think it's going to be huge.
It's going to be awesome. And the real estate market in Portland, people are starting to get nervous about real estate in Portland because it's gone up so much for so many years, and it's finally starting to kind of like stabilize or kind of go sideways. And people are thinking like, oh, maybe I'll wait till prices come down.
Right.
And it's hard for me that's an emotional response from a buyer. And I don't really have a counter to that. I'm like, hey, if you don't feel comfortable buying, I don't want to be the one to talk you into it. You know, you got to find, this is for you, not for me. But yeah. I do feel like real estate is very, very, very predictable and predictably good, a good place to be exposed to financially.
Yeah. Well, I know I'm probably way over time, but to make your point, the market crashed. Real estate fell hard in 2008.
No.
But yeah. if you track rents from 2008, they never stopped rising. And so whoever got rid of their house, and frankly, I was one of them. We actually sold at the top, and that's a long story as to how I knew that. But so we were lucky, and then we held out, and I didn't want to buy for too long. And so we watched rent we were renting in a really expensive neighborhood, and just kept going up and up and up to the point when we finally bought. It was just because the rent was pricing us out of the market. I think there's millions of consumers that did that. They dumped their house, they started renting, and then their rent's now way more than their house payment would have been. So what I tell people is, stop caring about how much your house is worth. It doesn't matter. Your house is where you raise your family and your kids grow up, and you have Christmas dinners and Thanksgiving and all that warmth and love that comes out of a house or a home. Or if it's a non-conventional family, it's still that place where you feel safe. And to know that that payment can never go up, that's worth $1 billion. Because you look at what rents have done. I mean, there's people that are having to move into really crappy areas because the rents went up too much in their nice areas. They can't afford to keep their kid in the school that they originally rented in because it was a good school district. They're priced out. Buy the house. And that's why I think I'm a big fan of the rent versus own, because in most markets, it's just as reasonable to own than. And it's amazing how few consumers realize you can buy a home with 3% down. It just blows my mind. Do that, like go in the grocery store and say, hey, do you know how much it takes to buy a house? They'll look at like you're crazy, but they'll go, I read 20%. No, 3%. Right. And you don't even have to have great credit to do it. So that's why I think this housing will not go down with the economy. There's too much pent-up demand for buying.
So small recession is overdue. Small shrinkage in a recession. And another thing that I think is that we should, before we cut loose, the idea of recession, the word recession has been damaged. Mm-hmm. Before 2008, we kept calling it the Great Recession. We didn't want to call it a depression. It was probably more akin to a depression than anything, but we called the Great Recession. And now when people are like, oh, a recession's coming, they think that means an absolute meltdown. And it's not. No, we've had recessions periodically. It's a natural part of the economy.
Yeah, ebb and flow. That's right. We didn't grow that quarter. So what? Do you know the difference between a recession and a depression?
Recession is 2 quarters of shrinkage.
So a recession
what's a depression?
A recession is when your neighbor's out of work, and a depression is when you're out of work.
That's a good way to think of it. Yeah.
That's how I look at it. So I'm sorry I took you off off your track. And if you want to do it again, I'll be a better interviewer.
No, I'm glad to have you. I know you're a good thinker and a good talker. So I'm thank you for making time. Looks like your dog wants to get in on the action here.
Yeah, he's ready to go. We got the trailer all hitched up, ready to roll.
All right. Well, hey, Dan, thank you so much for all you do for us in the mortgage industry with your day. If you're a mortgage lender and you're listening to this, you got to join the Mortgage Coach Productivity Group on Facebook, where Dan every day will post a 2 or 3 minute video where he talks about what he thinks is going to happen in the mortgage bond space, if rates are going to go up or down. And I wanted just to take you a little further into the future, into early spring of 2020 and beyond. And so thank you for taking that journey with us, Dan. And
yeah, my pleasure.
Yeah, and check out universityofoptions.com for more information on Dan. And he's really passionate about options trading. And so you can engage him on everything you ever wanted to know about options trading there, and sign up for his newsletter. And I think it would be, he's a great, has a great perspective on all things economic and otherwise. So thank you so much, Dan. Chris, as always.
Yeah. James, real quick, people want to reach out to you for.
Oh, yeah. If you want to talk to me about anything, you can find me at pdxhomeloan.com. You can email me, james@pdxhomeloan.com. And I'd love to chat with you one-on-one about what we think is going to happen in real estate in Portland in 2020. I've got thoughts, and let's keep the conversation going. All right. Awesome. Until next time.
Thanks, guys.
Yeah.
Thanks,
bye.
Dan.